Asian markets, which are opening with cuts and pretty steep cuts at that.
This play out for a while, and that should bring inflation down.
Excess liquidity should engage the attention of the Reserve Bank going forward.
20-day moving average for the Nifty is 19,509. That's the first resistance level to cross.
We have 1,300 more crore of debt possibility.
Down about 100 points straight off the bat on the Nifty.
I think this market continues to be very, very strong.
Portfolio itself has grown. I mean, on an average, it has doubled.
Prior 7 weeks, crude oil prices, Brent prices rallied by about 15%.
Lows that we've actually hit on the Nifty today are exactly the same lows that we were battling on Friday.
Venu Nair has resigned as MD CEO.
25th of August is when the lock-in ends. That means the shares are going to be open to be traded.
So there is no room for any kind of a laxity.
For the markets below that 19,300 mark, 88 points lower on the Nifty.
Well, it's a market which is coming off a little bit, down 3 digits, 100 points lower. That was the day so far, and this is closing well. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a down day for the market, but I guess, guys, it's also a bit of a bittersweet, sad day. Nandita, who's our producer, who's the person behind the screen who you don't see, but who we hear all the time. I mean, this is the last show that she's going to be rolling on popular demand, right?
Oh, absolutely. So, and among other things, fantastic director, always keeps us on our toes, excellent in high-pressure situation, and also our hair police, the back-end hair police. Make sure that we're all nice and tidy and, looking, spiff and span.
And Nandita normally rolls the bazaar most of the time, but she's come in by special demand because, the anchors wanted her. So, Nandita, I mean... wish you all the best, but I'm going to miss you tremendously. Last 8-9 years have been great, and thanks for the photographs prior to the show. We'll click some post the show as well.
And post them so that people know who we're talking about. So we'll do that.
We'll do that.
Absolutely. All right. Well, let's just quickly tell you, where we are at. I mean, so the market on the Nifty hit the low of 19,253. Actually, it broke it on the way down. That's the low from last week, and then there was a bit of a bounce. So it's been. It doesn't look like the market wants to stay there, but at higher levels, around 19,300, a little higher than that, there is selling pressure, which is emerging. And we're at about 19,278 right now. Well, financials, I dare say, are looking a little better as compared to the Nifty. And that's been true yesterday, it's been true the day before yesterday as well. I mean, actually, if you look at the contribution, the Nifty contribution, what is pushing things up and down, it is financials, which is, the top 3 contributors are all financials. I mean, Bajaj Finserv, ICICI Bank, and a bunch others. Mid caps and small caps, they are down around 0.5% each. So no respite there. And of course, later tonight, we'll hear from Fed Chair Powell. And I think... I don't want to use cliches, make or break, and a big event or anything, but it's going to be a risk event because if the Fed has to convey that what you all thought, which is that we've reached a neutral kind of rate and we will hold this rate for the next many meetings, if there has to be a change in that, and sometimes directing or indicating beforehand to the market is important, this would be the venue. So it's been in past occasions, and this would be important to track, but we'll only know later today. And reaction on Monday morning. In any case, even if they don't change, even if they change, say something significant on both sides, it's going to be meaningful. Surabhi.
Prashant, I want to remind some of our younger viewers why, you'll hear a lot of us talk about Jackson Hole every year with so much of, firepower. It is because, by the way, it's a mountain resort in the state of Wyoming in the U.S., and that's where all the central bankers congregate and they discuss policy and the outlook for the world. It was actually here, Prashant, remember, it was, I think, 2007. That was a Jackson Hole meeting where Raghuram Rajan very famously predicted that there is a crisis in the making. A lot of central bankers laughed him off at that point in time. But, 2008, and we know what happened.
I think he's the one who popularized Jackson Hole, right?
Probably. Before that, we didn't care. But after 2007 and Raghuram Rajan coming out with that statement, we did. So that's just a little piece of history. Nigel knows I love my history.
2007, guys, I was chilling it.
Okay,
but good to track it today. Anyways, 60 minutes to go to trade, and at least on a closing basis, the bulls will want to scalp something. The 18,250 odd mark, that's been a bit of a support zone. We breached that in today, but you'll want to hold on to that. So let's see how this goes for now. we made this point earlier today that dip, some part of the bad news could have been in the price, some part of it could be expiry related. So if you bought in the morning, actually you got a good bounce of 70 points approximately. And then that got sold into. So it's a scalper's market. You buy the intraday dip, but you also book out and don't carry your positions. The question is, how do you trade this final hour? Well, to help us out with just that, Mitesh Shakkal joins us. Hi, Mitesh. Good afternoon. A bit of a down day, but how are you reading it?
Well, actually, we did have some kind of intraday recovery and then we again sold off. That is the worry. I think, the recoveries from 19,250 aren't very strong. The first time we hit that level, 19,257 was 14th of August and we bounced back from there to about 19,480 odd levels. Next time we hit about 19,253 and we bounced back to about 19,585. And today we have hit 19,230 again and we have barely managed to get past 19,350. So mildly worried. But as I said, I think this level is full of support zones, this 19,200 to 40 area. So still keeping my fingers crossed that it holds. And if that happens, then we should again start a journey towards 19,600 plus level, which is the upper end of the range. With that kind of a view, I have one buy and one sell call. JSW Steel is something which is looking negative. It's breaking below short-term averages. So here I recommend selling with a stop at 784 for targets of 750. And amongst the IT names, Persistent remains strong, remains in an outperforming mode. So buy here with a stop below 5,100 for targets of 5,300.
Okay, Mitesh, got that. By the way, that's Aurobindo Pharma finally speaking on all these reports that have been doing the rounds right from the morning, that this company is looking at perhaps some sort of dilution, some sort of equity raising in its injectables business. That's UGF Pharma is the injectables business for Aurobindo. And that stock is now trying to recover from the lows. Actually, I should just point out in terms of weakness, quite a few auto stocks are pretty weak at this hour. Tata Motors, Mahindra and Mahindra, Eicher Motors. Suddenly all the auto guys are skidding. And there's some weakness there.
One reason is because a Reuters report is indicating the government is planning to lower the EV import tax to as low as 15% in comparison to 100% earlier. So that's why that's being read negatively, particularly for Tata Motors, which obviously has the giant part of the market share here in India. So Tata Motors stock, that one has taken a sharp knock. And now, in fact, it's stabilizing. We're trying to check further whether or not, about the authenticity of this. But for the time being, we're quoting the Reuters report.
Yeah, absolutely. That explains the fall. It's a rather sharp sell-off on a lot of these stocks. So if there are changes in the duty and domestic OEMs then no longer have, that sort of a safeguard in place, and obviously that could be a little problematic for the business. But anyway, we will talk about that as we go forward on the show. Let's take it ahead and talk about the key stocks that are on our radar. One of them is Shoppers Stop. Now, this stock has been down right from the word go, 10-11% lower, after the company's MD and CEO announced that he was stepping down. And that change is effective right from the 1st of September. Mangalam's joining in. Mangalam, why is the street perhaps reading this so negatively?
Shoppers Stop indeed is under pressure in today's trading session, and that's largely on account of management changes. We have Venu Nair, who's resigned as the MD CEO of the company with effect from August 31st itself. Remember, Venu was instrumental in leading the company through the pandemic, increasing their digitization foray, and at the same time increasing the share of revenue coming in from personal brands in Shoppers Stop as well. He will be around for the next 6 months to guide the new CEO and has resigned due to personal reasons and to look at new opportunities as well. The new CEO, Kavindra Mishra, is the current Chief Commercial Officer, joined the company in May 2023 itself. He's an old retail hand as well, has been with Aditya Birla Fashion and Retail, House of Anita Dongre, been with companies like Pepe, United Colors of Benetton and Tommy Hilfiger as well. So this transition in a normal era would be absolutely smooth and perhaps a non-event as well. But the reason why the stock is lower is also uncertainty at the top in light of the large looming competition. Reliance, for instance, announced its foray into value fashion through the start of U-Star, and we've seen the success of Zudio with Trent as well. So with Reliance coming into this category, Shoppers Stop, there could be some serious competition. So the street would have liked some stability at the top during this period itself. We also saw a decline in the share prices of Trent on the account of that today.
All right, Mangalam, thanks very much for that. Well, we've got Gurmeet Chadha joining in, Managing Partner and Chief Investment Officer at Complete Circle. Gurmeet, good afternoon and more importantly, happy Friday to you. Let's talk shoppers. I mean, I don't know if you have any interest in the stock, if you've looked at the company at all, but management changes happen. And as Mangalam described, the person who's going, I mean, they still have a holding, a handover period of 3 months. Are you surprised with such a severe reaction?
Businesses are leadership driven, especially with shopper stock. They also lost some executives to Nykaa, a year back. Also, the Q1 performance was slightly soft. The private label brand also, which they have, which is Shop, the contribution is still 14-15%. It's not grown in terms of what eventually they wanted to it being 25-30%. They are entering into the value segment as Mangalam also pointed out, which is the max kind of equivalent. And revenue growth was actually led by more, the high ASPs. So there was a negative volume growth. So it's coming on back of that. So I think that's why you probably see a negative reaction. These things tend to happen. We like Trend more, but again, the valuations there are also pretty expensive. So not adding either in the portfolio right now.
Okay, all right. Gurmeet, I wanted to ask you about Tata Motors as well, Gurmeet. The news that's coming in there is that India could probably reduce the import tax on EVs from 100% to 15%. Now, Tata Motors is a stock that's getting smacked because it has bulk of the market share and it's being read negatively. And suddenly the fear is maybe the Teslas of the world make their way in here. How do you read this piece of news? Tata Motors has been a big outperformer, plenty of triggers for them, but this kind of news will be a dampener, right?
Yeah, if it happens, Nigel, but a bit. If you see, JLR still makes up for 3/4. They are guiding for almost 400,000 units, and which makes the bulk of it. They've turned free cash flow positive as guided after some hiccups. Significant reduction in net debt. The commercial vehicle side is also now picking up pretty well for them, and on passenger vehicles, they are clearly the leaders. So all three parts. Fighting for them. And India is a slightly different market. It's very price sensitive. And reason Tata leads is because the Tiago and Nexa are still in a price point which is at the lower end. The likes of Tesla, or if this news is correct, we don't know if that is correct, would be at much higher price points in my view. So and the reaction is just 1 or 2%. It's also the stock, mind you, from 2-digit it's run about 6-7 times since COVID. So there could be some bit of profit taking there, but I don't see that as a big dampener, and I don't think so. There'll be a 50% reduction in EV. Looks a little far stretched.
Okay, got that. We'll wait for what comes of it. Gurmeet, just coming to you. Let me just quickly bring in our colleague Nisha as well. SoftBank may look to sell Zomato shares after its lock-in ends today. Nisha, tell us more.
Thanks for that. Yes, sources with direct knowledge of the development have shared with us that SoftBank could be looking at offloading its stake in Zomato because the lock-in period after the Blinkit buyout 1 year back, that ends today on to August 25th. So the shares which are now SoftBank holds in Zomato are going to be tradable and unlocked from August 28th. Now, sources with direct knowledge have also shared with us that there are investment bankers building the book to capture the demand for Zomato shares. Remember that SoftBank had got 3.35% stake in Zomato, and this had come through the Blinkit deal in which SoftBank was invested in Blinkit, and by way of the acquisition by Zomato, SoftBank had got shares of Zomato. So 3.35% stake is what they hold at the current moment. Remember, the implied value at which they got Zomato shares was around 70 rupees per share, and right now they are in the money and could be looking at cashing out in the next week. Also remember that venture capitalists Sequoia as well as Tiger Global are the others for whom the lock-in period of 1 year ends today. So a lot of action expected in Zomato. We reached out to both the companies, SoftBank as well as Zomato. Didn't get any response from them on this development.
Got that. Nisha, thank you very much for that. Gurmeet, I mean, comment on Zomato, if you will, although I reckon, you'd rather go to, I don't think Chola Bhatura tastes well when delivered by Zomato. You need to go to the place to eat it. Anyway, if you have a comment on Zomato, weigh in. But I want you to also comment on HDFC Bank. We are a lot of questions about what's really ailing it and whether something is, amiss. Valuations have come off quite a bit. So your thoughts?
Yeah. So, this will be an overhang with most new-age companies like Zomato. The moment, the price goes up and the lock-in period ends. We saw that with Paytm, with Ant Group also. There were news of offloading a stake, and now with SoftBank. But Zomato, if you see operational performance has impressed the market. And so they were a bit positive. It was 2.1% margin against -3% last quarter, I mean. And they're guiding for a 40% consolidated growth for Zomato and 60% for Blinkit, doing a turnaround there. And this was obviously has been led by, lower cost and high take rates. The only risk, as I've said earlier, is ONDC. Not immediately, but eventually if ONDC scales up, the take rate can come down. But I think with now just a duopoly structure, I think if they manage things well, don't really do misallocation of capital, they look steady, I mean, in my view. So, but that's a risk which will remain. So, as I said, I prefer QSR more over food delivery. Reason is that they have a literally negative working capital. And after an inflection point, whether it is Westlife, whether it is some of the other names we hold, the growth in free cash flows is pretty good. And, Westlife in particular is guiding for 50+ store additions. SSG growth has been very, very good. And what I best like about it is that 95% sourcing is domestic. So very, very well integrated, backward forward. On HDFC Bank, it's a bit of a surprise, actually, despite valuations being 2.2 on FY24 book value. I think now the combined entity trades at 14 times earnings versus Nifty being at 20 times. I think that comment of the CEO that, there will be pressure on margins with the liability mop-up probably also ruffled the feathers. So I think it's got to do a bit of that. But my feedback in terms of my interaction with my ex-colleagues and all, July was one of the best ever month, and they continue to be very targeted towards their 20% plus liability growth. So I think valuation comfort is there, and it's a little surprising. It's just 40% up in the last 5 years, 45% up. It's like an MD return, very unlike HDFC Bank. But my sense is that patient investors should get rewarded over the long term.
Okay, so keep the faith, be patient, and you will get rewarded. I guess that's the mantra for HDFC Bank. Gurmeet, stay on. We'll have some more questions for you. We'll take a break and come right back with more stocks. We will also have in a bit our Alpha Manager of the Day joining in, Aman Chauhan of Abacus Asset Management. Welcome back. So the situation is that we're 120 down and there is no meaningful recovery, you'd have to say. It's not a Friday where buyers are queuing in. And Fridays have kind of, made a habit of doing this. Even last Friday, we were struggling exactly at these levels. And that's the statement that I was making when you heard that video wrap in the start of the show. 19,253 was the low that Friday. Today, of course, we breached that, went well below that. But we're still struggling around pretty much the same arena, the same area. Gurmeet, one stock that has had a lot of pressure on it this week is actually Reliance Industries. Come Monday, obviously, we'll all look out for the AGM. But you tell us, what have you made of things? And Reliance, as is, a lot of brokerages still have, a target of 3,000, even post the JFS demerger. What would your outlook be on the stock for, let's say, the near term?
Well, it will be pretty constructive. So if you see, for example, they did pre-money in retail at half the valuation at which now QIA has put $1 billion. So that makes retail at about $100 billion. You see Jio, that's almost $120, $125 billion as per our sense of the last enterprise value. Which makes it about $225 billion, and Reliance current market cap is around $200 billion, which means oil to chemical is not there in the current price, right? Obviously, there are holding company discounts, etc. And 50% plus EBIT still comes from OTC. So I think with Jio Financial Services, I think directionally they will, restructure more, and probably you will see separate listing of retail and Jio in the near future. We can't put a timeline, so you got to have a long-term view there. And I think that even the OTC business continues to do well. They invest heavily. They're very, very keen on the clean energy space. The traditional business is doing well. GRMs are holding up well. And stock hasn't done much. If you see, over the last 2-3 years after, obviously, it ran up post those deals, which happened in the COVID period. So we are pretty constructive. I think both from, the operational performance picking up and significant value unlocking over the next 12 to 24 months, maybe. Even in Jio Financial Services, we are constructive. I think the kind of team they are developing, they're not going to be happy with just 10, 20,000 crores of loan book. I think they will have aggressive plans even in terms of acquiring, and going the inorganic route is what retail has done. So I think that's another space, which we are keeping a very, very close eye on.
Okay, all right. By the way, the markets are moving to the low point of the day, but Vodafone Idea, one of those big underperformers, is up 9%. The hope is that they can come up with some kind of money from the, and raise some equity. So that's one stock that you should keep an eye out on, currently holding at the high point. And Suzlon, I saw an order win that was flashing for you on the screen. So Suzlon as well continues its upward march. I think 200 megawatt is what they have added. They have told us they already have an order book of around 1.6 gigawatt. So that order book is swelling up. Execution is something that we'll be tracking from here on. Well, Gurmeet, in the last few minutes, I'm looking at a couple of these pharma names. Dr. Reddy's has moved lower. Sun Pharma as well is moved lower. Any view on these names? And from the pharma pack, what do you like?
So, Nigel, I think there's been a bit of a run-up from the lows. I think the low point pharma represented was just 3.5% of Nifty. So there's some value buying coming. Also, I think the US pricing pressure is not as much as it was. A lot of people have exited US. If you look at some of the top line of companies like Dupin, Sun, US, their top lines, because of the price erosion, is actually lesser than what they were doing 5 years back. So valuations have been okay, and I think so. There's something. The branded pharma has become very expensive. Even Mankind Pharma post the listing now is expensive. It's actually now in line with an Abbott and some of the other MNC names. I think we like hospitals. I think that's one space which is looking very, very good. The occupancy levels are up for something like a Max, for example. It's 74-75%. The average revenue per occupied bed is picking up very nicely, and I think they've got their capital allocation strategy right. Max is mainly focused on metros. Apollo, after doing that pan-India expansion, is now very focused. Somebody like a Narayan Hridayalaya is more focused on probably tier 2 towns and specific geographies. So I think this is one space which will continue to pick up, do well. And mind you, education, medicines are cheapest in India, but it's the the healthcare services which will gradually get more valuations. So that's a space we like, and we like the select CDMO names. Some of them have really done well. Newland is, for example, has picked up well. We continue to like Laurus, Syngene, and also Divi's, in that space.
All right. Okay, Gurmeet, thank you very much. We will let you go on that note and enjoy the weekend. Have a great one. Have a good one. and we look forward to connecting next week. Well, the news is that we're down about 0.6% on the benchmark index, a little more than that on the mid-cap, and the Bank Nifty has also resumed its slide. Now, speaking of the Bank Nifty, Prashant has been, discussing this with a lot of the industry stakeholders with respect to whether we are looking at some sort of a credit quality deterioration in the making when it comes to retail loans, specifically unsecured retail loans. Prashant, tell us more.
Actually, the trigger for this is that a large NBFC, which is Piramal Finance, the MD of Piramal Finance, and they run a large book, some 64,000 crores worth of assets. They, on a panel that I was doing, said that, and he said, Mr. Sridharan said, that a credit cycle in the unsecured loan segment is actually just months away, not years, but months away. So actually, I just want to quickly play out the soundbite for our viewers, and then I'd like to present some data. Let's play the bite.
I think we've all got to imagine that whether we can see it coming or not, a credit cycle is coming, right? And now, which part of the segment it might come from?
How many years out, do you think? I mean, best guess.
You use the wrong word there. I would say months. You look at the data. What do we see right now at the industry level? We see secured lending products, risk continuing to come down across the full industry level. You see personal loans products, risk was coming down for a long time and now it has stabilized. And you see credit cards, it was coming down, it stabilized and now it has started going up. So credit cards has gone up. Within personal loans, which look stable, if you split it up into small ticket and large ticket personal loans, small ticket personal loans risk has already gone up compared to 6 months ago. So credit cards and small ticket personal loans risk is already up. MFI just went through a cycle 2 years ago, so they're not going to see any problems for a little while. But the semi-urban, urban markets, unsecured lending, is risk going to be remain where it is today, 6 months from now? I would bet serious money against it.
Well, that was Piramal Finance MD Jairam Sridharan, which has a total AUM of 64,000 crores, warning that a credit cycle is just months away and not years away. I actually decided to take a look at the numbers and how do they add up. The growth in the unsecured segment is what the focus really is. So let's dive straight in. So when we say unsecured, what exactly do we mean? Unsecured lending, right? What products? Well, it refers largely to personal loans and loans for consumption purposes, as also unsecured lending to small and medium enterprises, SME lending, but on the unsecured side. So that's basically what the unsecured segment really constitutes. Now, let's just take a look at the big numbers, right? First, over a 5-year period ending March 2023, the compounded, the CAGR lending growth in the unsecured segment has been 27%. It far outshines the growth in the secured segment, which has only grown 11%. Now, just one caveat. These numbers include the microfinance companies and what they've done as well. But for the purpose of what all the numbers that you will see from here, we will exclude MFI, since microfinance as a segment, just emerged from a credit cycle only a couple of years back. And as Jairam also pointed out, a fresh cycle there looks unlikely so far. So they seem to have, as he pointed out, perhaps a couple of years of clean run. So we're looking at, unsecured lending, but not MFIs. Let's take a look at the numbers now. Unsecured lending by NBFCs is estimated to grow to 4.5 lakh crores from 3.5 lakh crores as of FY23. Those are the numbers. That's an estimation by ICRA. And of course, these are the actual numbers, as you can see. There was a dip in FY21, right? FY21 over FY20, there was a small dip, but that was largely due to COVID. But after that, the numbers have zoomed, and how? From 1.8 lakh crores in 3 years flat, you're basically going up to 4.5 odd lakh crores. That is, a very, very fast pace of growth. That is the reason why many at the margin are starting to get a little worried. In percentage terms, that is, unsecured lending as a percentage of retail loans. The numbers show something similar. It's expected to go up to 18%. As of the end of FY23, that number was 16.4%. The FY21 number, that is, right after COVID, we were at 12%. So 12 to 18 in 3 years. The growth in the unsecured share of the total pie is actually very, very impressive. And I think it stands out. What about banks now? We're talking about NBFCs, but what about banks? Where do they stand? Well, RBI data shows that banks' personal loan book stood at 43 lakh crores as of the end of, this is data as of the end of June 2023. The unsecured book as a percentage of the retail book now is between 33 and 34%. These are the numbers in lakh crores, 43, 14 to 15 lakh crores unsecured. So that's about 33 to 34 odd percent. Of course, I mean, if you take a look at the total bank lending in the system, that stood at about roughly 140 lakh crores plus. So if you want to compare this number to the total, it will seem minuscule, and that perhaps is the reason why many are not very worried about banks because they're well capitalized, leverage, etc. is low. The issue mostly, which many are highlighting, is about NBFCs. But for banks also, it is meaningful. I mean, as a percentage of sort of personal loans, it is not small. So this is the picture on a consolidated basis. I mean, then for NBFCs, that number is closer to sort of knocking at 17%. For banks, it's now, as a percentage of personal loans, it's about between 33 and 34% or so. Just to kind of wrap, right, these are the numbers. Bajaj Finance has the sort of largest unsecured portfolio on a consolidated basis, which includes their housing business as well. Bajaj has about 40% of unsecured loans outstanding. If you take standalone, that number is even higher. It's about 60%. But consolidated is the number the market looks at. That's about 40%. Piramal Enterprises, large, 64,000 crores. The unsecured portion is about 10%. And I mean, you could take a look at a credit card issuer like SBI Cards. I'm, of course, only focusing on the listed part here. The entire thing, the entire sort of, issuance and the AUM will count in this particular category. Time will, of course, tell if some of these warnings which are coming in from NBFC CEOs like Jairam of Piramal, etc., will come true or not. But I have to say that it's not just Piramal Finance. RBI recently sounded worried about it, about the unsecured and the fast growth we are seeing there. Bajaj Finance itself, post its earnings, said that it is slowing, it's very consciously slowing the lending in the rural unsecured category. And there are others who are also now starting to talk about it. Yes, it makes sense to be a little watchful on this space from here on out. Well, Aman Chauhan is with us. He's a fund manager at Abacus Asset Management. Aman, good to have you with us here. Always appreciate it. I trust you sort of looked at some of the data that I presented and you're listening in. Just wanted your thoughts, Aman. How would you as an investor look at what companies are saying and the data itself?
Well, the data that we have and what companies are telling us, they are all hoping that we have entered the festive season, and so far the festive season has gone off well. We'll be soon getting into state elections, 3 large states, MP, Chhattisgarh and Rajasthan in November, December, and then we have the central elections. And everyone is hoping that ahead of the elections, there is a money flowing into the economy, the cash in the system goes up, there is a feel-good factor which comes in directly or indirectly, and hence nobody is expecting credit costs to go up. We have been pretty positive on the microfinance first segment. We have portfolio exposure there, and the commentary there is pretty strong. They have just come out of a cycle. It's been almost 1.5 years of upcycle, and they expect at least 2 to 3 years that upcycle will stay. So our data point so far is not suggesting any, you can say, alarming signs or red signals, at least as of now.
Okay. Aman, to just press on that point, hi, good afternoon, Surabhi here. Just to press on that point, in your all-cap strategy, you have exposure to banks and also some NBFC stocks. I saw SBI, Axis Bank, ICICI among the blue chip bank names, and there's, I think, IIFL Finance among the key holdings. Incrementally, when you look to deploy additional money from here on, within financials, where would you go? Prashant presented one strong debate that clearly is now, gaining traction. The other debate is, of course, on margins, whether the best of the margin expansion is behind us and now what happens from here on, cost of funds, etc. So going forward for the next, let's say, 1 or 2 years, if you take that view, where would you put fresh money to work in financials?
So we buy that argument that the best of the margins is behind us, and the margins can squeeze from these levels, but they'll still be healthy. We would focus on NBFCs, but the larger NBFCs. So you need to be a top 2 player in the segment that you're operating. So we'll not look at small NBFCs. And within banks, obviously, the top banks will continue to do well. So focus will be there, even for PSU or private. Go for size, go for people who have scale, both banking as well as NBFC. So that's the strategy going ahead as far as the financials are concerned.
Hi, Aman. Good afternoon. Aman, I wanted to ask you about the textile space. I don't know whether you'll have exposure, but normally you'll get into these niche segments. And the trend that we have seen is the commentary that came in from the managements at the end of first quarter is they're very optimistic about the second quarter. And more importantly, US is not getting into a recession. Well, the Globe is saying that's not the best news because the central bankers will go on hiking rates. But some of these sectors where destocking has taken place, suddenly the inventory levels are very low in the United States. So textiles could get a bit of a booster shot. Are you all in that camp?
Yes, we are in that camp, and it's not just destocking. What is also helping these companies is that the cotton prices are off their highs. So from say 40,000-50,000 rupees a bale, it hit a high of lakh, and now it's back to around 50,000-60,000 levels, and it's looking like it will stay or go further down. And the margin pressure they all faced last year, both because volumes didn't pick up and there was higher cotton prices, were all going to reverse, and that is getting reflected in the companies also. So for the next year and a half, they are all pretty hopeful that from a low base, this segment can do well. Domestic retailing is also sounding positive that from 2Q onwards, they will be demand should pick up, but that's more of a hope that India will do well and there's going to be elections and things will pick up. But one also needs to bear in mind that the 2Q numbers might not reflect this because of the Diwali. Last year, Diwali was slightly ahead than what it is this year. So there's going to be 1-2 months of sales, which will get more captured in the 3Q than in 2Q. But overall, yeah, from these levels, even our portfolio companies and the commentary that we speak to management, they're all hoping that both exports as well as domestics will start to pick up both top line as well as margins.
All right, I'll be putting out a piece later today on Editors Roundtable as well on the textile space and why some of these stocks are very excited. The US inventory levels are low, managements are positive, and as Aman said, the hope is that the spreads from here on will improve as well as cotton prices cool off and maybe yarn prices could stabilize a little bit.
And hopefully that, long-awaited structural shift of manufacturing of textiles in India, that kind of picks up in a pretty big way as well, right? From
Prashant,
countries...
couple of more points as well, but that will be for Editors Roundtable. There's an FTA that could be probably signed with the UK as well. Currently, out of the 22 billion that they import, India accounts for just $1 billion, so just around 5% odd, while China, Pakistan, Bangladesh are far bigger. So if that FTA is signed, then that disadvantage that we have, it puts us, makes us more competitive. But more on that at 4:30.
Well, that's a tease, but you gave out a little bit more. That's okay. All right, well, that's 4:30 coming up. 90 points lower, 19,294 is where we are at right now. Aman, tell us, talk to us about what you're doing in terms of single stocks. Just give us some ideas. Where are you being opportunistic? Because you guys are opportunistic. You see large moves, sometimes unwarranted, and you guys sort of go in. So what are you seeing out there?
We have been pretty choosy on the IPO front. Going ahead, we are seeing good opportunities in some of the new IPOs that is coming in. So that is something which has been a focus area for us. We have also selectively participated in some of the recent PE exit deals that has come in, though not in a big way, but selectively some liquidity has gone on that front also. So of late, say in the last 1 month, this has been the two, you can say, new activities that we have been looking and focusing on.
Okay, got that, Aman. Let me also ask you about probably what was the sector of the week, and that is this category of space stocks. We used to call them defense stocks earlier, and the market figured that a lot of these companies are doing a lot of work for ISRO, and then they shot up. I was looking at their profile. These are, in terms of revenue, they're not very big companies. From some 200 crores, I think Paras Defense, going up to 800 crores if you're looking at Astra Microwave. Full year revenue, that is. Now, stocks have gone up anywhere between 20% and 80-90%. So for investors who want to understand this better, and they're convinced of the opportunity because these are long-term suppliers to ISRO or DRDO, on the defense side, how do you wrap your head around valuations? What's a band that would make sense for an actual investor, not a trader in and out on momentum?
In the near term, there's complete momentum in these stocks, and as we saw it a few days back, these Chandrayaan costed around 600 or 650 CRs, but the market of companies supplying to Chandrayaan went up by almost 40-50,000 crores. Right? So that's completely crazy. It is a good opportunity. These are good companies doing well. But at the same time, we have to see that this is not something which is very scalable. We don't have a satellite being launched every week or every month kind of thing, right? So these opportunities are there. The bigger opportunity, I think, is what the government is focusing, which is Make in India, both the defense and in the space. So there where I think scalable opportunity is there, and that is what the market is focusing on. So suddenly in the last 6 months, people have started paying 20, 30 multiples to defense stocks and to the railway stocks is predominantly because the action the government has taken, where order books has gone up, and it's a clear mandate that we need to reduce the import bill, and that's what these companies are benefiting out of it. So instead of just focusing on ISRO or a small event, the bigger pie the investors are looking forward is the defense space, where we want to you can say reduce the import bill.
And you said 20, 30 times. I mean, would you be comfortable with this sort of multiple band, 20, 30 times? Would this be sensible according to you? If not, then what is a, let's say, sensible, reasonable multiple band for some of these defense plays?
It's a start of an upcycle. So what happens in an upcycle, the valuations are always on the higher side. But what will happen then on a low base, there'll be 1 to 2 years where the companies can double the profit. Suddenly this 30p will look 15, and then 15p, then on a normalized 15% growth will give you 15-20% steady returns over the next 3 to 4 years. Since this is just the start of the cycle, I think 25-30 multiples are justified for now, unless a company has already doubled the profit over the last 1 to 2 years, which very few companies have done. So they're all sitting at an order book. The next 1 to 2 years, profits are doubling, and this 30p will suddenly look 15p. And then we'll all justify that they can trade at 20 plus multiples. So for now, I'm okay with the kind of valuation these companies are.
Okay. All right. Got that, Aman. Good speaking with you as always. Thank you very much for joining us this afternoon. You have a good weekend, and we look forward to the next conversation. Quick break. On that note, we'll come back on the other side. Of course, as usual, all the buzz and the chatter from the dealing rooms with Nimesh. And then we will have Nimesh join in as well. We'll have Mitesh join in for some technical calls. Welcome back. You are with us on Closing Bell. Just an alert that the finance minister has, I think, arrived at the, she's there at the B20 summit in the run-up to the big G20 meeting in New Delhi. And we're watching by. And of course, we will keep getting you snippets and highlights from the finance minister's speech as well. So more on that in just a bit. For the time being, let's quickly figure out what's been happening on the dealing room side today. Nimesh is joining in. Nimesh, weekday for the bulls. What did you pick up today?
Yes, sir. A choppy day of trade. In fact, it's been a choppy week as well, right? And for the second day running, is the financials which are dragging the larger indices down, largely on the back of sell flows. Now, again, from a flow point of view, it's a mixed day with a negative bias. But do remember, again, today's institutional data will be impacted because of large blocks. So today there were blocks worth $330 million. So for this week, we've crossed the $1.5 billion of size in terms of only the large block deal. So that's also a bit, sucking out the liquidity as well from the large institutions. I guess the bigger negative was the breadth is still negative in the broader market. So that's a bit of a reversal as far as a mid-cap outperformance, which has been there for the last many days. So that's turned a bit negative today. And I guess from a trigger point of view, all eyes will be on the Reliance AGM on Monday. Remember, there is a lot of expectations built up as well. So that's very keenly been watched. And today, for a change, we've seen huge volumes in Jio Financial Services after being on down circuit for the last couple of days. So huge volumes there, but broadly, the bias is still slightly negative from the larger FIs, and looks like we are ending the week on a bit of a choppy note.
Okay, yeah, that's the overall sentiment. Not the best on a Friday. But then there's always great sentiment when it comes to the deal street, the buzz on the blocks, and there have been so many of them today as well. What about stocks? Anything else that you're tracking?
Well, so apart from the block deals, the first stock on my list today is IFL Securities. Big move in that stock, up 7% and on large volumes as well. I understand a domestic mutual fund has an active buyer in this particular stock. Remember, a couple of weeks back, some large HNIs are also bought in block deals. So this is something which is clearly on investor radar. The second stock is Vodafone Idea, the biggest mover, FNO mover in today's trade. Well, there are a lot of reports as well about fundraising and all. But outside that, from a flow perspective, for the second day running, I understand there are very strong buy flows. In fact, a global European fund apparently is an active buyer in Vodafone Idea for the last couple of days. So that's the reason why there are large volumes and the stock is buzzing as well. The third stock is GMR Airports. We saw a big move in that stock as well in the last many days. The stock has entered the FNO band yesterday. Today, a bit of reversal as well, largely in profit booking. And today, there is a Kotak note downgrading the stock after a 40% upside rally, and hence that stock is slightly under pressure today. And the last stock is Indian Hotels, marginally under pressure, but that's purely on back of sell flow. So some bit of profit booking seems to be in Indian Hotel as well from the larger FIs today.
Okay, got that, Nimesh. Thanks very much. Now let's go back across and listen into the finance minister at the B20.
Whether it is physical infrastructure or social inclusion. You spoke about inclusion, yes, on social inclusion as well. So all these have positioned India on a higher and sustainable growth path. The budget in the government's budget had increased the capital outlay by about 33% in 23-24. The capital expenditure in total expenditure has gone up from 12.3% in 18 to 22.4% in 24 financial years. And I'm only quoting the budget estimates. Several measures have been implemented by our government, and it has incentivized states to increase their capital spendings. State capital expenditure has increased by 74.3% year on year in Q1 of FY24. To complement that of the center's capex had increased in the same period by 59.1% for the same quarter. So, because of the enhanced provisioning, a doubt which was in the mind of a lot of people earlier said, what will happen to private investment if public investment is growing at this level? Actually, I'm happy to say this enhanced provision for capital expenditure by the government is now crowding in private investment. So the green shoots of a private capital expenditure upcycle can be palpably felt by most of the observers. So also the measures taken during the COVID, immediately after the COVID, have all been recognized by international agencies, saying 13.5 crore Indians escaped multidimensional poverty between 2015-16 and 2019-20, 21. So this is attributable clearly to the government's strategic focus on achieving universal access to basic amenities. So escaping poverty, this bulk section which comes out of this is naturally going to form the layer of the aspirational middle class, hoping to better their livelihood, better their living standards, and also expect to access most of the services which are so required for good health and good education. So this naturally is going to bring in the virtuous cycle of consumption, savings, and human capital accumulation as well. Now, if I were to therefore go back to talking about the topic that you've given me, there are 5 things which I'll highlight as key priorities for sustained global economic growth. For global economic growth, my priorities would be taming inflation. So that's critical and absolutely critical. There's a lot of expectation on what the Fed is going to say from Jackson Hole. All of us are wondering how that is going to come out, because its spillover is also something which we notice. So key priority for economic growth is taming inflation, because persistently high inflation will weaken demand. It's basic economics. I'm not saying anything new. Equally, elevated interest rates for considerable time can come in the way of economic recovery. So the tendency to use interest rates as the only solution for dealing with inflation has its own downside. And most economies do have this problem, because I think, for want of a better word, obsession with using interest rate as the only tool to deal with inflation and not manage the supply side factors will not give a complete solution for inflation. Temporarily it can give, but sooner the supply side issues can creep their ugly heads up. So the task, therefore, for the central banks, and I know I'm treading on an area which people would be curious to know, did she comment on central bank? But task for central bank, therefore, will have to keep, particularly in today's context, is to keep in mind growth and growth-related priorities, even as equally looking at controlling inflation. The fiscal deficit needs also to be restrained. Otherwise, inflation is not going to be wholesomely defeated or brought under control. The second of the priorities I'd like to put before you is increasing the emphasis on investments to spur growth. That's a sure shot route to achieving growth, sustained growth, and therefore investment in physical assets needs to be substantially raised, driven by the public sector if it is possible, and complemented by private sector. So the public sector may also have to take the lead until the private sector steps in. That's the story which is happening in India, and you see unrelentingly Government of India looking focused for increased public expenditure. But I can see that it is also now attracting private sector to come in and invest. To have a large multiplier impact on recovery and growth, therefore, investments is the best answer. The labor force participation and also improving on productivity simultaneously with increasing investments are two essentials to go with it, and labor force participation rates will have to therefore increase, for which enabling policies will have to be made. Post-pandemic, only a few countries will have the fiscal room to increase public expenditure on capital. Yet, it has got to be increased. There is no way of looking at constraints and saying I can't have expenditure from public for capital increase. The third of the important factor is raising investments, even as I say for public expenditure, for investments, for infrastructure. I would say focusing on investments in public health and education is a very key priority for sustained growth. So globally, I think the focus should be on health and education. It is not as if only India, because it's part of the emerging market world, it has to spend on health and education. Health systems are collapsing, even in developed countries. And unless money goes into that, we will have a health crisis. And it's no good to differentiate between developed countries and developing countries. Health is got to be kept up always in a very robust and dynamic fashion. Skilling also is important, and that's why I group it under education and health as two important public expenditure items. The fourth one, which I would say as very key to sustaining growth, is climate change finance. I know the B20, I know the climate-related groups, and also others are talking about climate financing. We've started with a sense of pessimism only because the 100 billion has never come on the table, but there are always the other side which says we didn't know what this 100 billion is going to go for. It has never been defined. There are legitimate arguments being put forward saying that is why the 100 billion has never come on the table. But the fact remains that few countries, and I'm happy to say India is one among them, have funded their own commitments given in Paris and fulfilled their nationally determined commitments with their own resources. Not very many countries are going to be lucky to do that. And for India too, the transition period is going to be a challenge if we have to fund it all on our own resources. So financing climate change is a key factor for sustaining global economic recovery. Now, this money is one thing when we say we need the money for transition or as well, but we need the money for technology as well. We need the money for transition, we need the money for technology as well. And then, if both these are made available, very many countries which are in no position to, fund their own climate commitments.
All right, that's a finance minister. Important comments coming in. Well, let's just take a quick look at the market, which is now down 140 points. I mean, if you were hoping that there would be some sort of a recovery, etc., by close, nothing. We are basically almost to the day's high. Not quite there. The day's low was made at 19,229.7, 19,230 basically. We're about 20 points off it. 19,247 or so is where the Nifty is now trading at. So this is pretty sort of poor overall. Banks are still off a little bit more from its low, and the low there was 43,983. We're at about 44,200. Yeah, 44,200 or so. Mitesh is still with us. Mitesh, I mean, closing last few minutes. Is there any way to trade or take a position here? Because later tonight you have that Powell speech as well. Go on.
So, I think, given the fact that we are closing near the level of 19,200, one long position should be pruned down. There's always a risk of a gap down below a key support, and then it could create a typical or troublesome situation if you are carrying long zone. So one, cut down your long position. Even on the STBT side, explore, or maybe if you have long position, explore some short side trades to balance your portfolio that way. And the one which I'm recommending is Bajaj Auto. That's closing near the day's low, and recommend the STBT here with the stop at about 46.25 for targets of around 45.50. And the other one is Tata Consumer, which I would recommend STBT with the stop at about 8.36 and a target of 8.20.
All right, Midesh, we will leave it there. Thank you very much for being with us this afternoon. You have a good weekend and catch you again on Monday morning. Well, we are ending at the lowest point of the day, and we are ending the week on a sort of low footing as well, because we are practically at that same zone of 19,239, 240 thereabouts, not too far away from the lowest level of the day. And all indices, the Nifty indices, have actually ended negative. So it's been quite a knockout today. Mid-cap index is down 1%, falling more than the Nifty and the Bank Nifty as well. So what was weak? Well, let's start with the losers. Dr. Reddy's, L&T. These are the key names on the downside. You have some of the Adani stocks, Adani Ports and Enterprises, both down about 2%. Weakness on names like ITC from the metal space, Hindalco, JSW Steel, with no clear sign of any big stimulus in China. Some of these metal stocks were losing off the momentum that they had going in the earlier part of the week. Then come in the banks, and that's been the biggest disappointment, so to speak. I mean, yesterday, Bank Nifty did much better, yesterday and day before, but today it fell as much as the Nifty. So no sustainability in that outperformance on the banking pack that we saw midweek. If you thought technology will come to the bull's rescue, wasn't to be. Tech Mahindra, LTI, Mindtree, all these stocks are down between 1 to 2% thereabouts. Reliance as well has been a big pain point for the market. Reliance for the week is down about 3.5%, 4%. That's a deep cut on Reliance for the week as well. Today the counterweights, only a few stocks. Bajaj Finserv is the Nifty winner. Some green on ONGC and Asian Paints. That's a trade continuing from yesterday because crude oil is cooling off. But otherwise, a really weak screen.
Well, that's right, but let's brighten it up a little bit. Let's pull up some of these stocks. In Swift Labs, that stock was up close to 20%. Not the biggest name, but volumes were rather high out there. Parag Milk as well did well. That was up close to around 15%. There are a couple of other notable names. Vindhya Telelinks was up close to around 13%. Now it's a 2,200 rupees stock. You had TT Limited as well, that was higher. And Gabriel India, just highlighting a few of these. Asahi India Glass as well. We had explained this company a year or so ago. So all these stocks up close to around 8 to around 15%. Not so bad, Sylvie.
Okay, some firecrackers to end the week, I guess.
Our colleague Hormuz informs that this is the fifth straight weekly drop for the Nifty. It's the first time since April, May of 2022 that this has happened. Bank Nifty has just escaped that fate. Else a 5-week drop would have been the first one since Feb, March of 2020 for the Bank Nifty. Well, that's not the case, at least not as of now. So, I mean, ending on a pretty weak note, 143 points lower, 19,243 on the index. Well, it's a wrap on this edition. Closing bell from all of us here. It's goodbye. But don't go anywhere. Our Friday special Smart Money comes up next. Stay tuned.